Imagine catching the next big wave in the stock market, a wave that could potentially dwarf even the tech boom. Imagine this: Chinese stocks like Alibaba, JD, and Pinduoduo skyrocketing to new all-time highs, turning your portfolio into a gold mine. Sounds exciting, right? Well, after a massive run-up this year, BABA is up 56%. The Seng Index is up nearly 17%. We just saw a brutal 10% drop in a single day. What's going on? In this video, I'm breaking down the chaos of Chinese stocks, why they have struggled for years, why they are surging now, and most importantly, what needs to happen for them to explode to new highs. Stick around, because if you are hunting for the next big investment opportunity, this could be the edge you need to crush it in the market. Let's dive in. Alright, let's set the stage. Chinese stocks have been on a wild ride lately. Alibaba is up 56% year to date, the Seng Index climbing 17%, and the QWeb ETF gaining 18%. We hit a wall. Just last week, stocks like BABA, JD, and Pinduoduo tanked hard. BABA dropped 7.82%, and others fell as much as 10% in a single day. The Hang Seng Index ended the week down 7.2%. But what sparked this? Some point to Alibaba's massive 52 billion capex announcement in the next 3 years. Think heavy spending on cloud and AI, but that's not a shock. It's been in their playbook. Others whispers about US tariff hikes under Trump's administration, but that's old news too. So why the panic? Volatility, my friends. Chinese stocks are a momentum machine right now, and when sentiments shift, it's a roller coaster. But there is the kicker. Even with this run, they are still miles below their 2021 peaks. Let's look back to understand why. Over the past 4 years, Chinese stocks have been a nightmare for investors. Rewind it to 2021. BABA hit $390, JD was over $108, and PDD touched $212. Today, they are nowhere close. BABA is hovering around $130. JD's it's at 40s. PDD's is at $120. What happened? The Chinese economy faced brutal headwinds. First, the government tech crackdown crushed giants like Alibaba with fines and regulations, spooking investors. Then, the zero COVID policy tanked consumer spending and crippled supply chains. Add a collapsing property market, think Evergrande's meltdown, and you have got a recipe for disaster. GDP growth slowed from double digits to around 4 to 5%. Deflation crept in, and corporate earnings took a hit. Global funds pulled out, favoring markets like India or the US. The result? A 5-year chart looks like a horror show. Stocks are down 50 to 7% from their highs, but here is where it gets interesting. That pain might be setting the stage for a comeback. So, the big question is, what needs to happen for Chinese stocks to climb back to those 2021 glory days and beyond? I boiled it down to 4 key catalysts. Let's break them down. First up, stability. Investors hate uncertainty. It's like kryptonite for stocks. Right now, Chinese markets are a guessing game. Will US tariffs jump from 10% to 60%? Trump is hinted at it, but details are murky. Will China retaliate? Then there is the government. Beijing unpredictable moves from tech crackdowns to property bailouts keep everyone on edge. For stocks to soar, we need clarity. If tariffs set at a manageable level, say 20 to 30%, and China's government signals consistent policies, not knee-jerk interventions, investors can plan. Stability builds trust, and trust brings cash. Without it, volatility will keep shredding gains. Second, we need confidence, both from consumers and investors. Chinese households have been better. Property values are down 12% since 2021. Saving rates are sky high at 40% of GDP, and spending is weak. For stocks to rally, people need to feel secure. Enter the CCP. Their September 2024 stimulus, rate cuts, home buying incentives, and cash vouchers was a start. The latest PMI data from February 2025 shows manufacturing ticking up to 50.2, a sign it's working, but it's not enough. We need bigger and bolder moves. Think direct consumer handouts or a 1 trillion stimulus bazooka. On the investor side, funds and institutions are underweight China. If Beijing keeps supporting markets like that 500 billion stock stabilization fund, confidence could snowball, pulling in billions from global players. In third place, we need growth. Stocks don't climb on hopes, they need hard numbers. China's GDP growth is stuck at 4 to 5%, way below its pre-2020 double-digit days. Corporate revenues and earnings are sluggish too. Baba's last quarter was solid but not spectacular. JD is growing at 7%. Pinduoduos is recovered from a Q2 stumble. For new highs, we need GDP pushing above 6%, fueled by a rebound property sector and a consumer spending. Earnings growth for 15 to 20% annually would light a fire on the stocks. Stimulus can help as well, but structural fixes like reforming the ecosystem to boost urban consumption are key. Growth signals strength, and strengths attract buyers. Finally, we need leadership. China needs its titans, Alibaba, JD, Pinduoduo, Tencent, to lead the charge. These stocks drive sentiment. Alibaba's cloud business is eating up. JD's is refocusing on China middle class. Pinduoduo's Temu is globalizing fast, but they need to deliver blowout earnings, not just okay results. Beyond that, government leadership matters. The National People's Congress in March 2025 could unveil game-changing reforms or stimulus. If Beijing doubles down on pro-growth policies and these companies execute, it's a 1-2 punch. Leadership inspires momentum, and momentum can push stocks to the moon. So, there you have it. Chinese stocks could explode if we get 4 key things: stability, confidence, growth, and leadership. The recent volatility is a reminder of the risk, but also the potential rewards. The last 4 years were rough, but today's valuation might scream opportunity. Baba, JD, and Pinduoduos are still cheap compared to their highs. This week's dip, just noise in a bigger story. If these 4 pieces fall into place, new all-time highs aren't a dream, they are a target. Love this deep dive? Please subscribe to the channel for more in-depth analysis and investment insight. I'm dedicated to helping you navigate the complexities of the stock market and find the best investment opportunities. Drop your thoughts below. Do you think China is ready to rebound? See you in the next one. This video is for informational purpose only and should not be considered financial advice. Always conduct your own research and consult with a qualified financial advisor before making any investment decision.